concepts that comes across is the sustainability-linked bond or sustainability-linked loan, and for that we need KPIs, key performance indicators. And so when we engage with companies and talk about the KPIs, we have to have clarity of where we want to go, and then how we can measure the impact that we're having. And so the conversation that we wanted to have today was about what have we learned, what are the challenges, and what are the opportunities to scale this type of instruments to support biodiversity or financing, unlocking biodiversity financing for the LAC region. So once again, my name is Ilan Meirovich. I am the head of climate change at IDB Invest, and I'm very pleased to be with this distinguished panel. And we'll start with Divya, the global head of ESG market engagement at S&P. And because KPIs come down to data, baselines, and where we want to go, can you tell us a little bit about the research that the S&P Global has done in the region, specifically in Latin America? What trends have you identified, and the relevance of this data for unlocking finance?
Sure, thank you, Lynn, and thank you all for spending time with us today. I'm very honored to be able to join a panel in COP16 on this very hectic day. So Sustainable One is the sustainability research and data think tank within the S&P Global umbrella. And what we did over the past couple of years is develop research on how companies are performing in terms of their dependency on ecosystem services and their impact on areas with high ecosystem significance. And so I'll just start very quickly with sort of a global picture and then come to Latin America. Globally, we found that looking across the S&P Global 1200, so the 1200 largest firms around the world, that 85% of them had at least one asset in an area of high ecosystem significance. So they're all really dependent on those areas. The vast majority of the largest companies have a high dependence, which was an interesting finding. And then we also looked, we were happy to join the proceedings in Montreal 2 years ago and to welcome the Global Biodiversity Framework. What we looked at is how are companies responding to the GBF and the Target 15. And we did find that all of a sudden there's an uptick in companies making zero deforestation commitments. However, it's off such a low base that it's hard to really, there's so few companies of about 3,000 that we found, fewer than 100. Now have zero or net zero deforestation commitments. However, a bright spot is definitely Latin America. So actually the country with the most companies that have made such a commitment is Colombia. And we do see that those commitments are being made by companies in Ecuador and Peru and Mexico and around the region. And then we also look not just at are companies making such a commitment, but are they actually doing something in terms of management or actions to support that commitment. And again, companies in Latin America were leading the pack globally. So definitely some room for optimism in this region, and we know that there are so many mega diverse countries here. So great to see that companies operating in this region are showing leadership. But also there's a huge amount of room for growth in terms of, generally speaking, company commitments to zero deforestation and to looking at their dependence on ecosystem services.
Thank you, Divya. I think that the issue of knowing that there are companies that are adopting certain commitments is important. I think that tracking those commitments is what's the most relevant, right? To know that will have the impact on the ground. So with that, I'll pass on to Stephanie. She's the VP and Chief Impact Officer of FinDev. So before we talk about specific examples with FinDev, just give us a brief introduction of what FinDev Canada is. why are you interested in the biodiversity agenda? And also, what do you think is the business model of, what's the role of MDBs and FinDev, institutions like FinDev Canada, to support this type of agenda?
All right, thank you. So, PINDEF Canada is the Canadian Development Finance Institution. We were launched 6 years ago to complement the solutions that Canada had to support sustainable development in emerging and developing economies. And so, our role is to invest in or finance financial institutions, companies, funds, projects in the agriculture sector, forestry sector, sustainable infrastructure, and more generally in the financial industry, in order to contribute positively to developing markets, creating jobs, driving gender equality, as well as advancing climate and nature action. So we work with and through private sector companies and financial institutions by providing them with a range of financial solutions from loans, investment, catalytic capital, as well as technical assistance to really affect positive change on people and the planet. So that's why we are keenly interested in innovative financing instrument that can really align and direct financial flows to promote and that go towards promoting the sustainable management of natural resources or conservation in order to really drive an inclusive and nature positive growth in developing economies. And so perhaps to bring some of our initiatives to light, I'll give an example, maybe a recent transaction. We've done many thematic bonds with IDB Invest, and just last July we collaborated on with LA Green as well on the first blue bond issuance in Costa Rica that was launched by Banco Nacional de Costa Rica, the largest bank in the country. And the proceeds of this bond will finance blue economy projects supporting marine coastal areas, sustainable water management, plastic waste management, and companies that operate in the circular economy. And of course, an issuance like this, beyond the impact that the underlying finance projects will have, I think can really have a demonstration effect to inspire and encourage financiers and companies to see the opportunity in the blue economy in this example. I think maybe touching on a couple of challenges, because this is what we need to talk about today, is of course, how do we scale and replicate such instruments? I think it's anchored on robust impact management and monitoring and metrics, as well as the pipeline. So I think there's everybody has a keen appetite to financiers have a keen appetite to invest in such companies, but we need to find valuable and viable business models that credibly are driving positive impacts in the markets, and those can be hard to find.
Thank you, Stephanie. Hervé, he is the Chief Sustainability Officer of the Americas in BNP Paribas. As you probably know, BNP Paribas is one of the leaders on sustainability-linked financing. And so tell us a little bit about how BNP Paribas is integrating biodiversity in this product that is so innovative.
Sure. So in the next 3 or 4 minutes, I'm going to give you examples and tell you truly how genuinely we've looked at this quite a long time. But before that, I'd like to caveat what I'm going to say, that we're just at the beginning of the journey. So I don't mean to brag. Yes, we've been a pioneer. We've been on the private banking sector. And yes, we've done a number of notable transactions, and we're very happy and glad with those. But if we look at all what we do, and including in the subset of sustainable finance, it's still very small. We're still trying collectively with everyone to test new structures in pilot mode, if I may say, and eventually find what you were calling for, something that we can scale up more quickly. Um, as I was asking you, what's the first question, just to get 5 minutes ago and to prepare, and I was looking through my stack of talking points, I came across a line that I wrote down from someone very famous from a Canadian pension fund, who's here actually, but I won't name him, who spoke at Climate Week a year ago on biodiversity. And I wrote that phrase that nature impact reporting is not difficult as long as you have a story to tell. And I think he's very right. It doesn't mean it's easy, but I think the message is far from impossible. You just need to focus on it and do the hard work. The same way climate, I'm not talking about financing, but at least, you know, data and target and measuring, you know, we've been able to do it in finance, we've been able to do it in accounting, we've been able to do it with carbon and climate. We can do it with nature. So let's not get that stop us. So to your question, it started. I think the focus on biodiversity at the bank started. Yeah, we can go back far. You know, it was included in our ESG policies from the last 20 years, but it's around 2017, 2018 that we were conscious that the biodiversity talks at the UN. There was supposed to be a big conference in China, if I remember, Beijing, and that's really when it started to percolate in the bank. And we published an ocean position in 2019. So just to show that, you know, it's not common, I think, for a bank just to publish a 15-page document just on our policy vis-a-vis oceans when we finance offshore winds, fisheries, etc. Now. We have tried from a long time, as we do sustainably linked instruments, which typically are first and foremost pegged on GHG emission, to introduce nature and social KPIs. We try not to lose sight of the forest, though. We don't want to put a KPI on a transaction if it's immaterial. We want to add them. You know, if you're first and foremost polluting with CO2, that should be what we should measure. But we should also see we try to push for the introduction of additional KPIs. So one example was with a Cemex, a cement company, very large, and actually that's doing a lot of things to be to forests to be more sustainable. And about 4 or 5 years ago, we did their first sustainability linked instrument. It was a 5 billion sustainability linked loan. So it was at the time the largest SLL in all the Americas. And this SLL had 5 KPIs. So the first 3, as you can expect, were around carbon emissions, about clinker factor, which is key in the emissions you're going to send in the atmosphere when you manufacture cement. But the last 2, one was on water intensity. So that's a start. And the last one was very interesting. It was about rehabilitation of decommissioned mines and quarries. So it's kind of interesting that you put that into a structure where you care about, once you've closed a quarry for your cement operation, that you're going to restore the habitat and ecosystem around it. So maybe I'll stop here. I have other stories, but just to kick it off.
No, thank you, Hervé. That's a good start to start, you know, going deep into the type of KPIs that we include in the transactions. I mean, Stephanie gave part of with a bank, and now you're talking about with a corporate. So it's a complementary way that it's different. When you work with a company, it's harder to get them to move the needle, to accept a KPI. With a bank, it's basically for them to include or work on a portfolio of their own lending, right? Although we did as well in Banco Bolivariano, one at the corporate level of the bank, asking them to start reporting on TNFD, jointly IDB Invest and FinDev. But the corporate side, having a company that will decide to implement a KPI that has to do with nature, that's why we invited Aline. She's the Sustainability and ESG Coordinator of Clavin. And you have done sustainability-linked products jointly with BNP and us. So why? I mean, because part of the issue is how do we convince our counterpart, the CFO of the company, to accept that this resource is the lending that they need, but they will have to achieve a KPI in 3 or 5 years, right?
Yeah, it's very difficult. Thank you for the invitation. For those who don't know, Klabin, we are a Brazilian and forest-based company with more than 125 years. I think this is a good indicator of sustainability finance as well, with more than 20,000 employees and 750,000 hectares of forests, both native and planted, and we have a huge challenge to manage it sustainably. And as for the sustainable finance approach, 34% of our total debt is actually linked to sustainability performance or use of proceeds, of which $1.5 billion were issued only to instruments linked to biodiversity targets. So that was a huge work, I'd say. But while we had actually 7 years ago developed a robust framework for bonds and loans regarding use of proceeds. But after 2 years, we could find the opportunity of developing a second framework for bonds and loans, also considering performance-based targets. But at that time, thankfully, we could not, we weren't like willing to consider the GHG KPI for, at the time we were approving our target with the SBTI. Thankfully, it was, we achieved that, but at that time we thought about considering nature-related KPIs. Even before this biodiversity topics was like widely discussed. So I think that it took a lot of guts from our side to choose KPIs related to instinctively water, biodiversity, and residues or soil. And after the SBTN was launched, we could find that, oh, we are on the right path, right? So we did this framework, and it was very successful in terms of issuing a sustainability-linked bond. So we were the first company to issue an SLB linked to water, biodiversity, and residues targets. And then 2 years later, we, together with IDB and the BNP and the IFC, we also structured a sustainability-linked loan for refinancing a huge project of ours of pulp. And just to give you a quick example, because although it may sound like, oh my goodness, this is so good, but I think that our challenge at that time, but even now, is to prove the materiality of biodiversity, even though, yeah, even though for us it is more easy to connect dependencies and impacts on forests because we are operating within them, right? But it was quite difficult for us and the banks to justify the materiality for, I'll give you the example, the right example of our KPI. Our target is to reintroduce local extinct species or to reinforce threatened species listed by the IUCN until 2030. And the trigger for this instrument is in 2 years. So, but the thing is that it does not represent that Klabin is now within the market or of rewilding actions, for example. It means actually that our company is so able to provide forests of quality that can provide shelter and food and reproduction conditions for those species, that at the end of the day, this target represents a target related to forests of quality. But this is very hard to explain for a second-party opinion provider, for example, for they could not find comparable data in the market at that time, or to do some benchmarking in the market. So that was very hard, I would say. Now with SPTN guidelines and with the TNFD, I think that it is easier to show dependencies and risks and impacts. But even so, I think that it is still a bit difficult for us to prove materiality yet. That is why in our frameworks, biodiversity is like a secondary KPI still, for we cannot actually use this as like our GHG emissions as SBTI aligned target, for example. But yeah, yeah, we like this to do this challenge.
No, thank you so much, Aline. And I think that you just gave the example that I knew about, that we supported on reintroducing species. And part of the conversation there is, first, how can we support with technical assistance, with advisory service, not leaving you alone with just the financing, but going with you, bringing the knowledge, supporting the clients in designing the KPI and reporting the KPI. But then, yeah.
Even more precise on the KPIs. And that's honestly, every time I talk about nature,
This one.
I give this example. So today,
We all do.
knowing you're on the stage, I chose another one, but it's the cutest, I think. So the KPIs, to be more precise, is to reintroduce at least 2 extinct or endangered species by 2025, and at least 3 by 2027. And you have a rate that goes up or down depending you do or you don't do it. But it's just to be precise for the crowd, you know, who's less familiar with how it works. It's a very quantitative, and there's a link between what they do and the interest rate.
Thank you. And maybe I'll take the fact that you're talking, and I'll ask you first the difficult question about time horizon, because as you just heard, it's 2 years and then 3 more years. So can we do this as fast, or do we know that in some cases the recovery of nature will take a little bit longer than our financing? If we go with the long-term financing as institutions, it's fine. It's a 20-year, 15 years. But sometimes our financing is for 3 years. Sometimes it's only 5. So how do we match, especially for nature? It's different for maybe other sectors, but for nature, how do we do it? So what's your take on that?
So I think I might take a sideway, because I think you're right, but I think there are enough longer-term financing where we can already apply this. I think depending on the topics, anywhere between 5 to 10 years. I mean, if it's here, you have a concrete example where within 5 to 7 years it's doable. When you deal with reforestation, let's say, and want to go into the economic period where let's say you can monetize the carbon credits for somehow monetizing the structure, let's say, so it can repay coupons of a bond or whatever. You have a minimum of at least 7 years before the tree is really grown, and so 10-year, maybe 9-year facility will work, but not much shorter, just to illustrate what you're saying. But I think, I mean, look, I think, as I said earlier, we're such at the beginnings that if we can introduce some of this there are enough medium/long-term financing where we can implement, and then tackle the question that you ask. The same happened in climate. You know, we started for green use of proceeds, green bonds, green loans, and then sustainability-linked loans that were linked to CO2 emission and so on. Typically, we were doing it on rather 5-year plus type of structures, and it's only after a while that we started to consider: can I do it with commercial paper? Can I do it with repo? Can I do it with a 1-year trade finance? And we found workarounds, but I think this question, which is a good question, might also be a little bit premature in all what we can do first.
Stephanie, I see that you want to
Well,
jump in.
yes, because I think, arguably it's much easier for a large company like yourself that owns and operates on a very large ecosystem. And even though, so you have a deep understanding of the ecosystem, you have a good understanding of the drivers. So even though it may be a short-term, relatively short-term tenure, you can understand what those drivers are. So really identify those indicators that you can deliver on in the short term. And then because you have strong commitments, you're aligned with, and you disclose, you're transparent, then perhaps there's that trust that you'll continue to monitor and measure. But what about when you work with an agribusiness that is working across different countries, various supply chains, and they source from smaller companies, smallholder farmers? I think that's really the challenge in developing sustainability-linked instruments that are shorter in term, that have short tenures, when we absolutely know that biodiversity objectives of reintroducing species or reforestation can take 10, 15, 20 years. So I think in these cases, it requires one, I think a good support to develop what the baseline is. So I think financiers or companies need to, invest and support the companies to really understand and choose the right value chains, for instance. And then, do what us development impact professionals do, but really develop a credible theory of change and be very, very specific about the activities that are linked to the key drivers of, to reverse biodiversity loss or conservation. And then, be very clear about what those shorter term indicators and outcomes are realistic to measure, that will then link to longer term objectives.
Divya, I see you.
Hello. Okay. I think it's been really good to hear about the debt and the bond issuance side of how financing can flow to nature positive. But just to broaden the picture a little bit to the equity side, I think on this question of long-term investing, first of all, it's good practice to be a long-term investor for all subjects, including nature and biodiversity. But we also have a number of clients who have asked us, on the road to where we are now, can you help us integrate physical climate risk into our investment practice? Yes, we can do scenario analysis, we can look at assets, how they're exposed to flooding or to extreme heat. Can you help us understand water management practices? So we've developed all of these indices that are under the umbrella of nature, whether it's looking at companies that are using water more efficiently or increasing their revenue through creating technologies that help their clients use water more efficiently, recycle it, reduce their dependence on it, etc. And then all manner of different types of sustainable industry indices, whether it's sustainable farming, sustainable mining, etc. So I think when you think about nature positive, for sure introducing endangered species is amazing and wonderful and very clearly linked to the subject. But I think we can also think about how financing can play a bigger role of reducing pressure on protected areas, on key biodiversity areas and areas of ecosystem significance through either water management, through not siting new assets in those areas, or through addressing physical climate risk by looking to nature as a potential source of solutions.
And I think that gives me the point, or highlights the point, that it depends on the type of company that we're talking about, right? And many of them will not be able to talk about introducing a species, but it has to do with how much water they're using. And you mentioned about working with the SPO provider, because these instruments have a second-party opinion to analyze the framework if the KPI is robust enough. So the SPO provider is critical that they understand what's your core business. But what's your take about the financing and the KPIs, the term of the financing and the KPIs?
Yeah, I think that as for Clamin, within our forest, our trees take 7 to 14 years to grow. So it is the time horizon for us not that difficult to consider. I think that it is more the matter, it is more related to the materiality proven thing, because we understand that financial instruments, they are actually tools to support the company to growth while addressing environmental benefits. So yeah, like it is very well structured in terms of planning our expansion, forest expansion, for example, industrial expansion, and trying to match the outcomes of our sustainability actions, for example, with the time horizon of of the instrument, the finance instrument. For example, we have our sustainability strategy that is due to 2030, and a lot of a green bond and a sustainability linked bond linked to this time horizon, and then we can issue another one, because certainly we're going to count on capex enough to do that. So that, I think that for us the challenge is to how to provide the best and ambitious KPI for that, and we understand that yesterday I was talking to a colleague from the mining sector, and their main challenge is to combat deforestation, for example. So their most ambitious target is to have zero deforestation in 10 years, but Klabin hasn't been deforesting since like 1998, because we were FSC certified at that time, and we've keeping maintaining this certification. So this is not like nor a risk nor an opportunity, you know, and that is why we were trying to achieve better in terms of quality KPI for biodiversity conservation. I'm here with my colleague Paulo, and he is the leader of our rewilding actions. And although we have committed with reintroducing 2 to 4 species, his list is long, you know. And the thing is, it's just a matter of time and investments for us to do so. So yeah, I think that now with SBTN targets, what we intend to do is to like increase our ambition to and update and review our targets related to water, soil, and biodiversity, so we could align with the global science ambition. It's not a matter of ambition, right? With the global science, and actually adjust our pathway.
Thank you, Aline. Maybe the last question would be, how can we scale? Because right now, this is a niche. I mean, it's not everywhere that we are talking about sustainability-linked financing with KPIs on biodiversity. Hervé?
I believe we can scale to an extent, and the keyword is to an extent. One reason is you mentioned earlier, multi-geographies, but biodiversity is for the most part very local, and both those who may be harming nature or doing good things, and I don't dispute the fact that there may be a whole food chain, if I may say, from the consumer to the financiers to whomever behind, but those who have the key to act both negatively or positively are numerous and fragmented. It's millions of farmers or millions of community members. And actually, when I visited the tiny part of Amazonia a year and a half ago to see some local bioeconomy solutions, and I was coming to this with my eyes, from a big corporation where we're used, I think, in all of our companies, where we're in companies in different sectors, but which have grown on the basis of industrialization. What we do, we're 100 to 200,000 people, and our BAU, business as usual, is made on things that we can industrialize and scale. And so I thought, same question, how can we scale? So let's go and see some bioeconomy solutions, and how can we scale them up? And I don't pretend to have truth, but my own self-revelation was we can't scale this but we can multiply them. And I think there's a nuance. Multiplying things that work is not the same as taking one thing and growing it. And the reason is, some cocoa plantation where you don't, you teach people to plant cocoa, you don't have to cut the tree, it grows under the shadow, but it's a community of 200 people. And the other one is like 5 miles away by boat. So I think this truth comes back to us. I think obviously we have bigger solutions in our hands, but I think, and some of these will scale, but it will be more a multiplication challenge than a scaling challenge, which means it takes time. It's going to be now. So one of the real challenge in financing nature at our level is the mismatch, again, between the size of our companies. When we talk bonds, any of us, I guess, we need at least to issue at least underwrite or issue at least 100 million, and that's small ticket. The benchmark size is $500 million. CEMEX SLL was 5 billion. Now, reforestation or conservation projects, for the most part, it's anywhere between $500,000 to 10, 20, 40 for the the biggest one. So first there is a size mismatch, and now you're going to tell me, oh well, okay, take a 110 million project, but I don't have, it's 100 credit analysis. Whether I do one credit analysis for a 5 billion bond or it's this. So that's the challenge. Now there is an instrument, outcome bond, that has been piloted over the last few years that gives me hope. Because in a nutshell, the challenge in blended finance is basically, first you need to find some fairly good sized project, $100 million, and all your $100 million are going to be at risk on, reforesting, conserving. You're not quite sure how it's going to go. In the outcome bond, it's typically an MDB that's going to issue a bond, $300 million, and the investor agrees upfront to forego, let's say, 50% of the coupons. So 50% of 300 million bond coupons, it's about $30 million present value, roughly. So the investor is putting his money in an MDB bond, which is AAA guaranteed, is not going to lose, he or she is not going to lose the principal. Only 50% of the interest rate basically is at play. That amount is well calibrated to the size of those projects. We all do our work with technical assistance, etc. So normally it's good projects. And if it works, basically the investor will also get the coupon with a slightly higher yield. That product, I think, the lead time to structure these products is probably a year or so. Blended finance is closer to 3, and gives me hope.
Gervais. It's always a pleasure to have you in the panels because he's always giving a big picture. Stephanie.
Yeah, I think, so I think just we need, of course, and this is what, these conversations about, but we need to connect climate, nature, prosperity, and the preservation of human society. And I think the Global Biodiversity Framework does this. Then financiers, and yes, indeed, the big asset owners, capital allocators, the financiers like yourselves. But what you're doing is not enough. So we also then need to go down at, financial institutions that are connected to medium-sized, smaller, and smaller-sized enterprises that are also essential to the solutions. Because the reality is that each and every one of us, as individuals, we need to change the way that we consume. Companies need to change the way that, their relation with nature, and financiers need to change. So we need a systems approach completely. So I think, yes, there's large-scale bonds, but I think IDB Invest has been successful at doing, smaller bonds. The blue bond I mentioned was $50 million, for example. But that's also that is also very large. But so I think initiatives that can bring together smaller financial institutions to work together to share knowledge about what good practice is, how to qualify nature positive investments, how to measure them, how to then allocate it, and then build the pipeline. So I think we also need to support and enable, build the capacity at financial institutions level, governments, civil society organizations to enable and support businesses to integrate nature into their business strategy. And I think what you launched, what you led on, IDB Invest and IFC launched a year ago, the Amazon Finance Network that we joined yesterday, but it is a good example of bringing together financiers that are in the Amazon region to work together to collectively think about practical ways to address this urgent issue.
Can give an example on this actually, because so indeed I was talking about the high scale, because when we want to drag the trillions of dollars, but one thing that BNP Paribas has also been doing, but I think it's more small scale. So for the last 35 years we've been financing microfinance institutions, and so we have a fairly large portfolio. Recently, with one Brazilian microfinance institutions that we are financing, we've introduced one KPI where basically those smallholders or microfinanciers will get a better rate if they do regenerative agriculture, basically. And it's also another way, indeed, to reach out. And indeed, there's a whole crescendo of finance. But obviously, the smaller it is, we need to multiply this.
Go ahead, Divya.
So I think in terms of this question of how to get to scale, what I've been mulling for the past 2 weeks or whatever it has been since Climate Week, where we really have tried to put nature and biodiversity on the forefront of all of our conversations and panels and everything. The past 2 years of forming this nature knowledge community with over 400 organizations, and really my whole career for the past 20 years is capacity building for investors to understand that their investments physically exist somewhere in the world. That idea of not just spatial finance, but locating where your assets are, that you should know where your assets are. That very basic information. So we've put a lot of energy into that, having more than 2 million asset level data points mapped to areas of ecosystem significance, rolled up to the company level, so investors can see where their portfolio physically is in the world. But that's really only the first step. Then what I've been thinking about is, this is just my personal opinion, but I think we need more cross-sector collaboration to look at areas of ecosystem significance and who is operating there. Communities, businesses in different industries, NGOs, development banks, etc. Who are all the actors that can come to bear on that location to work together collaboratively to actually either prevent further impact or restore those areas? What I hear from talking to companies on a kind of bilateral basis is they're in the beginning of this journey, but they also feel like they can't necessarily fix the problems by themselves. And so I don't think that they're purely just kind of passing the buck, some maybe, but I think it is true that you need this collaboration between different industries and between the private sector and public sector to actually change the situation on the ground. And then the third thing, as I was saying earlier in terms of scale, is to think about the impact of the private sector or the dependency on the private sector as more than just conservation terms. And to think about all the resources that go into those revenues that are created through industrialization and all the ways through either circular economy practices or dare I say, reduce consumption or, other practices that can actually reduce the pressure on these ecosystems. Because I think we've also been locked in this conversation about what the private sector can do as being purely conservation finance. And there's so much more that can be done beyond that one kind of area. So thinking more broadly, I hope will help us all scale.
Aline.
Yes, I thought about so many things and ideas right now, but I think that we understand although we're not we are not from the finance world, we are a real economy actor. We understand that we have the role to support you in your fiduciary duty. So I think that from company to company, I would say, like, do your transition plan and get to know your dependencies and impacts. But we all know, like, those steps. I just like to point out here the importance of involving the value chain, involving, like, the scope 3 of biodiversity, as you said, because and here I'm publicly asking you to put some pressure on us in showing the numbers related to our suppliers. For example, for us, to our wood suppliers, we depend on them. Like 30% of our total wood that we use come from them. So they also have to keep the same standards, sustainability standards, and when needed, we have to build capacity with them and the communities as well. We've been doing this for 20 years, and we have, like, good, excellent results in terms of conservation. And last message is to consider the ecosystem. This is what we've been trying to do there, is to consider the ecosystem services as fundamental human rights as well. So we don't forget, like, people, like traditional communities and indigenous peoples that know as much as a forest engineer, and their knowledge must be internalized as well in cooperation, in collaboration, together with public government. So we have to do a landscape management in this integrated level. And I would like speak about that.
Thank you, Aline. And now to conclude, instead of me doing the concluding remarks, we have the pleasure to have Marcos here from Nature Positive to maybe have a summary of what you've learned. Just 2 minutes to takeaways. But I think the initiative, Nature Positive initiative, is very important. So thank you for joining us.
Thank you for the nice word. This is the payback for doing your job. But no, so first of all, thank you for inviting me here, and brilliant to hear. These are a bit of reactive reflections, a bit random, I have to say, but the first of all is just amazing for me to be in conservation for so many years, to see so much discussion in the financial system and business and real economy on biodiversity. Unprecedented, and I think biodiversity has never been higher in the corporate agenda. Obviously, the reason is, unfortunately, that the decline of biodiversity is beginning to be noticed in the supply chain, shocks around the world, different levels, and so the dependencies dimension is a relatively new dimension, because until now we've been taking nature for granted, and now suddenly nature is weakening, resources are more scarce, and this is beginning to pinch the economy. So the entry point for business and financial institutions supporting business, clearly the most logical entry point is risks and dependencies. However, the famous figure the World Economic Forum has publicized has been very helpful to draw the attention, but actually it's quite misleading, of half of the GDP depending on nature, when actually the whole GDP depends on nature. The whole of the economy is a bioeconomy already. Problem is a nature negative bioeconomy. And so the transition to a nature positive bioeconomy, economy that actually is able to manage sustainably resources and maintain the natural capital that we need to move forward is critical. So your point about financing nature, designing KPIs is fundamental, because we heard commitment, we heard agreements, we heard international declarations. If you put them into a graph over the last 30 years, the curve goes like that. And if you look at a nature's state of nature of the last 30 years, it's going like that. So clearly, KPIs focus on halting and reversing nature loss are critical. And I'm saying this because the time has ended, the time where it was enough to do something about nature has ended. Now we have a reference point, like for climate. For climate is net zero emissions. For nature is net positive biodiversity, halt and reverse. And I hope that the whole discussion about KPIs is going to keep that global goal and reference point in mind, because unless we deliver halt and reverse, we're going to continue to see nature going down and economy suffer and people suffer. The last point to raise that some of you mentioned, I think is super important, that we're talking about financing nature. We're not talking enough about definancing nature destruction. And honestly, one dimension that is so encouraging is that you are all here talking on behalf of companies and institutions about how important it is to preserve nature for the resilience of the economy and your own investments. But there are also a broader dimension, which is about the impact that production and consumption, not just business, but consumption as well, of course, is generating on nature and creating externalities that affect the whole of society, not just single businesses. And at the end of the day, businesses depend on society. And so, it is a full circle. And I think we need to tackle the issue more holistically. And having this halt and reverse reference point, strong KPIs that delivers it. But also at the same time, that's what the initiative I'm convening is trying to help with, I hope. Also, back to the point that several of you raised, one thing as the big companies that have a high-level viewpoint of this, they have a great perspective, capacity and all the rest, knowledge. One thing are all the many millions of smallholders, providers of actual commodities that are part of the supply chain. And honestly, this is still a mystery, a secret, total secret. Nobody knows really where the impacts are in particularly in complex supply chains. So how can we help that constituency to begin to measure state of nature in a way which is simple, in a way which let them get into the dynamic of providing data into the supply chain, so that you investing, you sourcing, you delivering goods for society know whether through the supply chain you're having a positive or not positive impact. So, a lot more to say, but great progress over the last few years. Keep going. These, of course, are the best in class, but we need to also talk to the ones that are actually still wondering what to do. So thank you anyway for...
Thank you so much. And as always, this kind of panels, as moderator, I learn more than anything else. So thank you so much for joining us. And thank you for joining the conversation. Thank you, Marcos. Thank you, Hervé, Stephanie, Aline, and Divya. Thank you so much.